Hi, I am Anna. I come from www.ntvforex.com. USD mildly weaker, but will the sell-off continue after today's FOMC meeting? Video analysis. http ntvforex.com News ID 04BF9E 7/29/2020 12:19 p.m. Market Overview. After the elevated levels of volatility across major forex pairs and commodities, precious metals primarily in recent sessions, we see markets relatively settled this morning. This comes ahead of the July meeting of the Federal Reserve's FOMC. Markets have taken a view on selling the dollar recently. Huge increases in COVID-19 infections and deaths have driven several U.S. states to reverse their economy reopening procedures and reintroduce containment measures. The impact this is expected to have on U.S. economic underperformance in the coming months has driven yields lower and the dollar selling pressure. How the Fed reacts today could be a significant driver of either confirming this dollar sell-off, or potentially reversing it, at least near term. An allowance for higher inflation, and yield curve control are all potentials, but will this happen in a summer meeting? There has been such a swathe of dollar selling to extreme near-term oversold technical levels, so there may need to be a significant dovish lean from the Fed to drive further downside potential. Does this set up for a sell on rumor, buy on fact? Near-term dollar rebound this morning, we see little direction on yields, however, an edge of dollar selling is still present. Yesterday's larger than expected miss on U.S. consumer confidence has not helped, neither has news overnight that even the Republicans are against their own fiscal support package. It will be interesting to see if this dollar selling will continue in the wake of the Fed later today. Wall Street closed lower last night with the S&P 500 0.6% at 3,218, whilst futures are settled this morning. E-mini S&P's 0.1%. In Asian, there was a mixed look to trading, with Nikkei 1.2% but Shanghai Composite 1.8%. European markets look slightly cautious into the European Open, with FTSE futures 0.1% and DAX futures 0.3%. In Forex, the edge of USD underperformance has continued today, with Euro being the main outperformer. In commodities, after a hugely volatile session yesterday, there is a slight stalling of the bull runs on gold and silver, whilst oil continues to oscillate without any real direction. We are once more looking towards the U.S. session for the economic calendar today, with the Fed meeting of primary focus later in the day. The U.S. trade balance for June at 1330 BST is expected to show the deficit widening to $75.5 bn from $75.2 bn in May. Pending home sales at 1500 BST are expected to show a sizable recovery of 15.0% in June. The EIA crude oil inventories at 1530 BST are expected to show stocks building by 1.0 m barrels last week. However, the key announcement is with the FOMC monetary policy decision at 1900 BST. There is no change expected on rates, whilst it will be interesting to see if the statement contains any dovish leans. The FOMC press conference with Fed Chair Powell at 1930 BST is likely to be interesting too, with focus on the prospects for yield curve control and forward guidance. Chart of the day. Silver. Silver volatility has gone through the roof in the past week and a half. Since the breakout above $19.64, the old key 2019 resistance, the market has skyrocketed to levels not seen since 2013. At the high of $26.18 yesterday, silver had added 35% across 7 sessions. However, it has been the manner of the moves in recent days which is so incredible. Yesterday's intraday range of $3.85 was the widest of any session since 2011. Moves like these tend not to come in the middle of a trend, and will often be more the culmination of an exhaustion move. Additionally, the RSI is at 87, which aside from the all-time high of April 2011 is the most overbought it has ever been. It seems unlikely that silver will just consolidate for a while to calm the market down. As the market begins to slip back today, we see a retracement as increasingly likely now. There was an initial move intraday yesterday, but the bulls were not quite ready to give up yet. An intraday rebound of over 10% to leave an incredible long-legged doji candlestick leaves significant uncertainty in the bull run. Initial support at $22.25 is now in place, and although way back from current levels, we see it likely that this will be tested again by an incredibly overbought market. A breach would open a deeper corrective move. The $18.94-$19.64 breakout support would be a prime area for an unwinding retracement. On the hourly chart, the fizzle looks to have going out of the move, with resistance forming $24.74-$24.87. Brent crude oil. Despite the threat to the recovery that was seen during Monday's session, Brent crude continues to hold up. However, oil has become a stagnant market in recent weeks. As the market has effectively flattened off, it is increasingly becoming one devoid of any decisive signals. Small candlestick bodies are now commonplace, whilst momentum signals give a little real indication. We continue to monitor the 21-day moving average, currently $43.20, as it has acted as a great basis of support over recent weeks. We have described this moving average as rising, but perhaps now this should be barely rising. Despite this, there is still a run of higher lows in place on Brent crude, with $42.35 and $41.30 being the initial gauges of support. However, as the market has struggled to sustain positive traction in recent weeks, failing once more under the $45.20 key gap resistance, there will be growing questions over whether the bulls can continue this move higher. Dow Jones Industrial Average. As the Fed announcement approaches, the bull trends on the Dow are increasingly creaking. We continue to look at the near-term importance of the 26,300–26,610 support band, which has been tested over the past 3 sessions. However, yesterday's 205-tick decline is also now breaking the 4-month uptrend. A breach of 26,300 would confirm the trend breach now. It would also suggest that the price action over the past 7 weeks is in fact a big range play between 24,765–27,580. In breaking the long uptrend and moving below what is effectively the mid-range pivot band would mean that the impetus of the long recovery would have been lost. It would then imply pressure towards the first important higher low support at 25,525. Momentum indicators have tailed off recently and are also pointing to this now being a medium-term range, albeit with a mild positive bias still. The RSI has spent the past 6 weeks between 45.61, whilst MACD lines are now simply consolidating a shade above neutral. In this, we would still prefer to buy into weakness within the medium-term range. For now though, there is a growing risk of a near-term decline. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.